This video, it's going to change everything about the way that you trade. Like everything. It's going to remove any self-doubt, indecision, or frustration that you may be experiencing as a trader and put an end to that nonsense immediately. Because today, I'm going to show you a trading strategy that did the exact same thing for me many years ago. A strategy that would help me overcome years of bad trades, irrational decisions, and a sheep-like mentality, and quickly turn me into a consistently profitable six-figure-a-year trader, all in less than 9 months' time. But you know what? That wasn't even the most beautiful thing. The most beautiful thing was that after me spending years of banging my head against the wall in frustration, jumping from strategy to strategy, and living life like a hamster on a wheel, all of those problems were immediately solved with this strategy that only required me to have 30 minutes of time and patience every single morning and be able to draw one horizontal line. That was it. That was the beauty. Its effectiveness was in its simplicity. And from that moment on, I've never had to look back. And after you learn this today, you're not going to have to look back either. Because today I've taken this trading strategy and I've broken it down into a simple science. And we all know the art of becoming a successful trader is in simplicity, right? So all I need you to be able to do to execute this and start making money with it, I just need you to do 3 things. Number 1, I need you to be able to recognize 4 different shapes. Shapes by this time in your life you've already seen before. A check mark, an inverted check mark, a V, and an A. That's it. Number 2, I need you to wait at least 15 minutes after the market has opened to execute this strategy. Whether it's the Asian market, the London market, United States market, any market you're trading, I don't care. Wait 15 minutes. Here's why. One of the things we struggle with when we are new is processing information. You know what it's like. That bell rings, the heart flutters. You've got all these alerts going off, red lights, green lights. Things are kind of crazy. It can lead to panic and lead to FOMO. It certainly did for me. You're going to sit back. You're just going to relax. You're going to be like a sniper. You're going to eye that entry for 15 to 20 minutes. And at the precise time, you're in that trade. It's going to make a world of difference. Number 3, just be able to draw a horizontal line. That's it. Those are the only steps. Now, I know there's a little bit of sarcasm in that, but trust me, guys, if you can do that, I can show you a way to make money. And that's exactly what I'm going to do. I'm going to take that formula right there and put it in a real live market, make real live trades. That way, by the time this thing is done, there's not going to be any doubt whatsoever in your mind. So let's break down the check mark and the V-shape patterns first, because these are long biased trading strategies and they both have just 3 components to get this thing right. Starting with the check mark, beginning with number 1, what we're looking in this case is for anything that is moving down at the open. This is why we're waiting. We're looking for anything on our watch list that is pressing downward and is building a series of red candles on a 1 minute or a 5 minute. There could be a couple in between, but we're looking for a nice, slow movement downward. That begins the essence of the check mark. And from this moment, your eyes are going to be glued to a pivot. That's the horizontal line. I'm going to show you where and how to draw it, but there's a very, very predictable area where this thing has a big probability of reversing course. And that's what we're going to look for, and I'm going to show you a specific signal to look for, but you're going to start to see an upward movement. Now, this is also something I call the trust pocket. Like with all technical analysis, we must have a degree of trust with our system. Otherwise, we're just going to let ourselves down in the long run. I say that because in a lot of cases, it won't be as clean as I am drawing it. You will see moves that come downward like this, especially if you're using like a 1 minute chart. There'll be a lot of radical movement and noise, and then they may turn up. That's fine. I'm going to show you those. And on a 5 minute, it may look that way. Don't be discouraged by the noise. And then part 3 of this is that there's an extended target. It seems like when we're new, we always have a pretty good idea on how to get in, but we can't get out, right? This gives you a visualized target. So just keep that in mind. Real simple. And I'll show you these in a live market. Now, next would be the V shape. These have the same meaning to them. They're just handled a little bit differently. And on the V shape, it starts with a more aggressive drop, something that probably looks pretty scary to most people. It's a very big aggressive drop, maybe like 1 or 2 monstrous candles. That's the setup. Now, it's going to require a little bit more thinking because it's moving so quickly, but it's the same thing. At some point, there's going to be that horizontal line I'm going to show you. It's going to get close to that or around that area. You're going to start to see the pivot, trust pocket, right? You got to trust that. There could be a gap in between those two. But on the V, you're going to get a much sharper retracement. Here's what I want you to know about these two so you've got the concept down, because this makes all the difference in the world. The difference being is the emotional level. When the check mark is moving slowly downwards, there's not a whole lot of fear. So what happens is the reversal can tend to pay you a lot more. You can sit on that reversal and you can really bank on that extension, especially in bull markets. The V shapes are super, super fast. So as soon as it comes down there and it hits that, you're in, stops at the low of the day. But the difference being is the targets are far quicker. It's far more of an aggressive scalping strategy than the check mark. Those are the two differences. Now, quickly, I'll show you the inverse relationship on those two. It's very, very simple. You're looking for anything that's rallying aggressively, right? Just like the check mark, but on a gradient, not super, super parabolic, not super, supernova. You're looking for the little trust pocket and the pivot. Stop will be above the high of the day, right? And then you're looking for a very extended target that takes out the low of the day and possibly keeps on going. And when you have the A, right, the A-frame pattern, it is a much more aggressive parabolic supernova style. You still have the same trust pocket or possible noise. Stop is right above the high, and you're looking for the entire A-frame. So the key is all of these should retrace back to the origin of that move or that pivot. And I will show you these right now so you know exactly what they look like on the chart and tie some of these entries together. So take a look at AMD, and this is what a check mark would look like. Notice as the market opens, AMD moves downward, which appears to be at the beginning very aggressive, but not so much. You hit this little trust pocket, which is an area of consolidation. Again, a lot of noise in there on a 5-minute chart. But once that's clear, you'll notice the extension part of the check mark and AMD breaks through the high of day. So take a look at that. That's what a check mark may look like in a real-time environment. Now, of course, for us, when it comes to risk versus reward, this is what we're looking for, is to enter down towards the base of that area. And the target is either the high of day or above it. Now, I know what I'm showing you here on the charts is hindsight. I get that. I just want your eyes to be trained for the pattern, the rhythm, and how you're going to enter and exit. I get all this is hypothetical. I'm going to show you real-time charts so you see how it's executed in a real-time environment and how you'll be able to forecast this. But just for this part right now, that's what a check mark may look like. This would be a V-shaped pattern. You're going to notice a difference. So take a look at Facebook. See as it gets very, very aggressive about 30 minutes into the market open. Notice there's a big difference. There's a little more panic. There's a little more shake in this Facebook, and then it hits this pivot area. Now, I want to highlight this because those who follow this channel, I have done a lot of videos about that particular candle, about the John Wick candle, about the Power Tower, about those wicks appearing at certain locations. But I just want you to notice the difference between the two, between this and AMD. Take a look. As soon as this turns around, notice how aggressive it gets towards the upside. See that? Far more aggressive nature, far more parabolic move through the upside because the sell-off itself was aggressive in the first place. And of course, we're looking to enter down towards the base of that. No, it's hypothetical, right? And targets at least towards the high of day. In this case, very good risk versus reward. And that's what you're probably picking up now about these trades, is it puts you in the best risk versus reward situation. Now, if we go to the other side, what this might look in a short selling scenario and an inverted check mark, you have something like Apple. Notice how it goes aggressively at the open, right? So the first move is aggressive at the open, looks like it's going to break out. And then later on, you kind of press down towards the base of the box, okay, right back down to the bottom. Now, I want to highlight this move here when I talked about the trust pocket. Notice there's a little shenanigan bar right before this thing is ready to break down. You get that candle. See, it just kind of shoots right up, just prints for a few seconds above the high of day, then down it goes. In this case, we'd be looking here to achieve the same thing. Notice where the risk versus reward. Stop would be towards the top. There are signal candles there I'll show you about, but we always want to give ourselves a touch more room, even if it means we need to lower the position size. That'd have been real close on that one. Take a look right there. right? But back down. Now, sometimes, look, they're going to hit you and fool you, but you could get back in right there. That's a whole different topic. I actually did that video last week. What a V shape may look like on the other direction here, A frame, I should say. Here's Tesla. Notice this is about an hour after the market opens, and you'll see this very aggressive push upward. Notice the thrust upward, the parabolic emotion. Much like you're creating an emotional event, you turn around and down this thing goes, okay? So in this case, you would be looking to enter towards the top. Maybe back that up. See right there at the very top of that first pivot, and then back down and you revisit the bottom of the box. You get very good risk versus reward for this. Now you're probably saying at this point, look, bro, hindsight's 2020. Anybody can go back and find some perfect charts and start rewinding them and doing all this dazzling stuff. Hey, I get you on that one. That's not what I'm going to do here, because I'm going to show you right now how you can predict with a high degree of accuracy that that point right there on that chart was most likely going to be the pivot. And I'm going to show you how to enter it, because that is where we're going to draw that horizontal line. So let's take a look at these charts again, but a little bit more in detail about those pivots. So here's how you're going to find with a high degree of efficiency where those big pivots lie. I've done a video about this before, but in my opinion, no matter what you're trading, everything begins and ends with the daily chart. You have got to know some sort of past premium levels on a larger chart, because everything will start to make sense. And from there, we can condense down those entries. I'll show you exactly what I'm talking about here with this AMD. On the screen is the daily chart. And I want to go back to the previous day, and I'm going to highlight this area right here, which was the highs of the previous day. We're just going to shade that in and draw it out a little bit. And we're going to go down to the low of that day, and we're going to shade it and draw it all the way out here towards the right. Let me bounce this down to the 5-minute chart. And I want you to see something plain as day, right? It's not that difficult. Take a look where this AMD made that bounce. So you kind of push aggressively at the open, but what happens? You come right back down into that area. You see that? That low became the low on the daily. What made this candlestick work is the fact that it had confluence with a past level. And I've done this with the box theory. So if you're trading up on top of these levels, you don't have an edge. That's the point. If we take a look at this meta, you're going to find the same thing. Take a look at this pivot right here, this nice John Wick candle. If we draw this all the way out, right, this particular area, and just shade it in, when you pull up the daily chart, you're going to see there is a matching level. Like this just didn't bounce at some random number. You'll see right there it is, this 606 area. Take a look at it right here. It was a predictable area. You just got down into all of that previous resistance, right? That was on the daily. And look how that candle just came down in there and tested it. And you're going to see that with everything that you trade. In 99% of cases, at a predictable area. All you got to do is look left, look for the deep pivots. It may sound confusing. I'm going to show you real live trades. You got to get this stuff right if you want to be a successful trader, because a pattern is worthless unless it's placed properly. And hopefully you see that. It all begins. So start with marking the highs and lows of the day, and you want to try to buy into the low pivot, sell into the high pivot, short into the high pivot, and buy into the low pivot. Show you exactly what I'm talking about with a series of live trades. So let's look at some trade examples. These were 4 trades that were made today based off of the check mark, the inverted check mark, the V, and the A shape pattern. There were 2 of them on the ES or the MES futures, and 2 of them made on Apple. 3 wins, 1 loss. I'm going to walk you through the entire concept. Now, these trades were made with Think or Swim. There's the screenshot right there on the computer so you know that they were made. But I want to play it back here using TradingView so you can kind of get in the mind of me on how you see the market. So here's what I want to do. Let's first talk about the setup so we have the confidence that we need. If you take a look, this is the daily chart. I already got the lines marked here, marking the previous day's high and the previous day's low and beginning there. So I'm really interested in these 2 spots because they are big time premium levels on the daily. Okay, so now let's move to the 5-minute chart to show you the execution on these two trades. So the first entry on these futures was roughly right here in this area, and I'll put the screenshot up here. I just want you to focus on the process first. So again, take a look at what we have here. We have what appears to be a very aggressive drop, not extremely aggressive like it was earlier in the morning over here, but nonetheless, you got a nice little push downward. So take a look at this pivot. This again is something I've gone over dozens and dozens of times in videos, the John Wick. Take a look at where this particular pivot took place. It's not a random pivot. If you look at the very bottom of the screen, you'll see the blue line that we had drawn the previous day. It tagged that to the penny. And I'm going to play it forward here again. Bear with me. And what I do in these cases, because there's always things we have to understand when it comes to technical analysis, because this market here, again, the daily has a lot of different value to it. We're in a downtrending sell side market. So this is a contrarian trade. I am buying the dip on an asset that's currently in a sell side environment. For this case, what I did in this particular trade, remember, we must make adjustments. I like to get rid of the risk immediately. So in this case, what I would do, because I would love to be able to target these upper areas, and you might get it, but you might not. So rule number one for all of us is get rid of that risk, but we don't want to choke that trade too tight. But in this case, every single candle that moves up, I am underneath of that candle. So let's play it a little bit forward here. And for each one of these, I'm going to continue to move up just a little bit more on each one of these pieces of risk until eventually the market takes me out of the trade. That way, if it does go back to the high, and right there was roughly the area I was stopped out. I'll put it up here, the screenshot for everyone so they can see it. But take a look at that trade. This is how sometimes they're going to work for you. They won't just go all the way back up to the highs. So moving forward a few minutes later, take a look what happens. You end up revisiting that low one more time, right? You see the bounce that come right off of that. And I want to stop it right there because this is roughly where the second entry was. Again, I'll put the screenshot up there at the top. I just want you to get the anatomy of this down. This hits that pivot. This would not be a trade you would take if you were in a random area. Random areas get random results. Solid areas get solid results. That's what we need to understand. We're going to play it forward. Same theory, because we're countering this a little bit in the market. Then what we want to do is we want to trail that up. We want to get rid of that risk as soon as possible. Once this starts to move up, in this case, I went ahead and just trailed it up, and I'm going to keep doing that, right? This is how we get the big gains, is continuing to trail up, right? Let the market work for us. Sometimes you get a lot, sometimes you get a little, but you just keep going, and I just keep going every pivot. So take a look at each pivot into this chart, right? As long as you're holding a series of a couple of candles, hopefully you'll be able to see it, like right there. See this pivot right here? I would generally, in this case, is what I did today, was move that up, right, into that area. And then you just keep doing that until eventually the market takes you out. You know, maybe you get a lot, maybe you get a little. There's another pivot right there. So we continue to move it up, right? Let's push it forward here until the market takes you out, right? And each pivot, right, you get another one here. If you do, then you just move it up. So right there in a cluster like that, and you repeat that until eventually the party's over, right? And there's your trade. To save time real quickly, I'll just run through the Apple trade because it was the same thing. If you take a look, you mark the previous day's high and the previous day's low. So I'm going to just put those lines right here, and you'll see that we immediately went underneath of that low. And when you go underneath of the low, I should say, you want to start sifting around for other areas. Now, there's a couple other things about these trades, such as range, that we don't have time for. But again, this pivot right here was a calculated pivot that took place at a specific area. You can go all the way back, and you can see that in a cluster, in a zone, there's going to be some sort of response. So long before this ever makes it to where it pivots, you have some idea. Actually, on this trade, the first one was a loser, and it was right off of this pivot right here. And of course, I trailed up and got taken out over here. I probably should have been a little bit more aggressive in the target, but I want you to know, see if there's a little bit of, let's say, extra risk taken there. If there was something that you see about this trade right here versus the second one that was taken down here. Again, look at this line. If I continue to draw it out, right? This one was taken at a random area, and that led to a loss. And fortunately, the second trade was the same formula, trail up, trail up, trail up, and I got taken out roughly here, which was enough to cover the loss and make just a few bucks. But I just want to go over that one here. This was a nice flush downwards, but I jumped in on the entry. Now, I would say, in all honesty, that would be my fault on this one, because I know that. I know I'm taking a random trade. I know there's a higher degree of risk and there's a higher degree of uncertainty, and your ratio win is going to be lower. I should have been a little bit more aggressive and tightened that up. I actually could have walked away with a few bucks. Like, don't worry about losing on a trade. You're going to get another shot. So just in a real quick overview of this video, I've gone long enough. I think you got the point. The point of the check mark, the V, the inverted check mark, and the A frame, it's pattern visualization. You're looking for a move, and one thing we all have to practice is when we see a move on the chart, I'm just giving you a tip right now. When we see a move on the chart, you need to visualize what the right side is going to look at. Even if you draw it, what would that look like? Could it trickle up to that level? Can it pull down to that level? Can it bounce off of that level? Can it pull back to that level? Just do it. Just rehearse it. Just practice it. Just review these trades. Get in the reps, guys. You're going to make a lot of money. As always, let me thank you for watching this video. If you want a list of these stocks to trade, you want a watch list every week of recommendations, it's totally free. Go to therumers.com. And I hope this video is able to help you understand trading more and get you one step closer. If there's something I left out or I went too fast at times, my deepest apologies, but reach out to me through the comment section. I can do another one of these videos. I can try to explain the best that I can. I just want to make sure my goal number one is to get everyone to understand first, so we can have the right building blocks to become a six-figure a year trader. So on that note, guys, let me say thank you. Take care. Trade well. See you soon.